Welcome everyone, this is Thomas from TradeWin, and today I will share with the world the first ever complete backtest performed for a strategy. This strategy has been presented in my previous video. That's the adaptation from TTrades ICT Silver Bullet strategy. First, I will make a quick recall on the mechanical strategy I have been backtesting, then a recall on the variation of the strategy I backtested, and finally the most interesting part here will be to assess and review those results. So I'm going to be quick because I already explained that in my previous video on TTrades Silver Bullet. So here is the plan. It's the same as in the previous video. So instead of reading all this, we are going to take immediately the same example of July 7th. So this strategy is awesome because first, it's only tradable during a silver bullet timing. So here we are at the New York AM silver bullet session. We delimit the session from 10 to 11. Then, according to the strategy, the levels we are going to look at are the previous hour low and high. The previous low is here, and the high during the previous hour from 9 to 10 is here. So the idea is from 10 to detect when one of these levels gets swept. And here we have a sweep of the previous hour high. Then we are looking for a displacement in the opposite side with creation of a fair value gap. This is the setup. So we have here the low, which is taken via displacement, and the fair value gap appears here. Fine. So the idea from now is to, when you are at this level, after the candle closes here, to enter a limit order at this level, a limit short with the following characteristics: the entry just at the entrance of the FVG, the stop loss set at the previous high, and the take profit level to the opposite hourly level. Here, as we took the high, we are targeting the low. So here is the setup for now. So we continue, tack, tack, tack. Okay, price goes down. By the way, we are here obviously on the Nasdaq. You can see the 1500 here. And we are going down to this level. So at this level, the strategy says that we, in fact, forget everything we said before. We cancel the short trade because at this moment, I forget everything I did before. I cancel the trade. And I'm starting again the same routine, but targeting the opposite side, which means that now I'm looking for a displacement to the upside with creation of a fair value gap to the upside in order to enter a long position. So the trade has been cancelled, everything starts again. Let's go. At this point, the previous high was here. So we are going to wait until it is reached. But by the way, if we continue, I'm here, I go up, then we go down. The previous liquidity level becomes this one. The previous buy liquidity level becomes this one. So I'm forgetting the previous one set above. So from here, as we are taking this liquidity level, we confirm the move to the upside, which is cool. Now we are waiting for an FVG to be a fair value gap to be formed. And in fact, I made the gap here bigger than it really is, but the idea is to show you that there is a tiny fair value gap here, which is going to be our entry. And what happens is that some minutes just before 11, we reach back to this level to set the entry. So to sum up, when we are at this level, after the fair value gap has been defined, we can set a limit buy order. So at the entrance of the fair value gap, the stop loss is set exactly below the previous low, and we are targeting the next high, the high which is set by the previous hour level. So we can see that here we enter the trade, and that 2 hours later we can see that we reach our target profit. This is the TradeWin adapted ICT silver bullet inspired by TTrades. It's a pure mechanical plan which protocol is shared in the previous slide. Please watch this again, make the steps by yourself, and you will be able to do that again. So that was the core strategy. Now, because automation is awesome, I was able to modify parameters in order to test different versions of this same strategy. So to make a recall, TTrades only talked about the New York Silver Bullet AM session. The idea for me was to add parameters. Again, this is already said in my previous video more in details. I will go really rapidly here, just to say that I added the London Silver Bullet session, and more than the hourly levels in order to take profits, I added some fixed risk to reward ratios, 1, 2, 3 hours. And concerning the stop loss, I added a set to break-even condition whenever we hit 1 hour on unrealized gain. So R here corresponds to the risk you take per trade. So I'm not talking here in dollars, I'm not talking in percentages, I'm talking in multiples of R. You set the R you want, I don't care personally. TradeWin, when backtesting, also computes everything in terms of R. Fine. Summing up everything, we got variation tested on the London session only, other set of strategies that only trade the New York AM session, another set that would combine both, saying London and New York AM sessions, and I tested different time frames to see if this was maybe interesting or not. So overall, if you count all of these, for 8 different symbols, you get nearly 600 backtests performed by TradeWin. So this is the biggest backtest performed on the internet, which results will be published now. Thanks to Amazon Web Services, I'm able via TradeWin to compute so many trades that even if you had 100 lives, you wouldn't have the time to compute all of this. This is why TradeWin automation is awesome. Let's bring the results. This is the part you have been looking and you are waiting for, so let's dive into it. A quick reminder here that the results present in this study are based on 576 backtests performed by TradeWin, and that represents more than 300,000 trades executed during my simulations. The first question we need to answer is what time frame among the 3 tested is the best to trade the strategy, the core strategy and its strategy variations. Here are the results. If we take an example here, if I take this element here, this is how you need to read this table. If we trade in the 5 minutes time frame and only during New York session, one of the profitable strategies, you have on average 300 trades performed during the past 15 years. That's exactly what I mean by this table. we understand that when we go into the lower time frame, then we have an increased number of trades executed, which for the next slides, I will mainly focus on the 1 minute time frame because this is the time frame where we have the most trading opportunities. If we take the approximation that 1 year is around 250 trading days, then we have the following percentages. 50% chance to have an entry for London session for the past 15 years, 38% for New York AM session, and 87% chance to have one entry per day if you follow both sessions, London and New York AM. Okay? This is what the table means. Another question we might ask ourselves is how many variations of the core strategy tested on the 1 minute time frame are profitable for the backtested period? And the answer is 40. And I define a profitable simulation when the overall results of it have a gain-loss ratio greater than 1. This means you earn more than you lose. Here is the details about the symbols. This means that for every symbol, we have at least one profitable simulation, one profitable strategy variation. But does this mean that I'm going to trade each of them? The answer is not. And the purpose of the next slides is to share with you how I analyze this data and what I would choose to trade. In order to make you understand how I call my strategy variations, here are the strategy variation names. This ugly combination of words here corresponds to the name I give to one specific strategy variation. Any strategy variation has and begins with edge. Then we have the session parts. Either London only when the strategy only focuses during London silver bullet session, New York only when it focuses only on New York AM silver bullet session, and you have nothing here when we trade both sessions. The TP stands for take profit. It corresponds to the take profit condition, either 1 hour, 2 hours, 3 hours, with R the risk you take per trade. A very important thing here, TradeWin never computes anything based on percentages or dollar amounts, okay? We only focus on multiples of R, so you choose the R you want. If you want to trade R with like a $50 risk per trade, that would be your R. If you trade with $500, that will be your R. You'll decide what is your R, and it's part of your risk management strategy. And finally, the SL for stop loss corresponds to the stop loss condition. SL break-even means, as explained in the beginning of the video, that we set the stop loss to break-even whenever we reach 1 hour of unrealized profits. Okay, so now you are able to understand any strategy variation. Let's bring the results with the London-only variations. Here is the table that lists on the left the TradeWin strategy variations with many columns on the right. So you have at each time the symbol corresponding to the strategy. The max losing streak, this one is really important for me because it corresponds to the maximum number of consecutive losses you would have had for the past 15 years if trading this strategy on the specific symbol. After that, we have the win rate in percentages. We have the total profit, again in terms of multiples of R, and the gain-loss ratio. As an element, we can notice that there is only one strategy variation that makes the core strategy positive and profitable. Okay? It's only the 1 hour take profit condition during London session that is profitable. So here you see that the least profitable concerns the Euro USD okay, for a 50% win rate with only a 39% with a 39R gain over 20 years. Would I trade this strategy on Euro USD? The answer is not. It's too low. We don't have enough profits here, even if it's profitable. That's why I like this total profit column. And then the gain-loss ratio. And I ordered here, I ranked my strategies and the symbols based on the gain-loss ratio, which is for me the most important metric. I will let you study this table. I will go on to the next slide in order to give you some explanations. Remember that those results correspond to only 1 hour of screen time per day trading the London Silver Bullet session. Fine. Let's continue comparing, for example, 2 different quotes for the same strategy. There are so many of you out there thinking that, yeah, I prefer NASDAQ, yeah, I prefer ES, you do whatever you want. This is what TradeWin outputs, okay? And here on the 2 graphs, you have the cumulative performance for the backtest. On the left, London only for ES. On the right, London only for NQ with the same target, which is 1 hour. I take profit when I reach 1 hour. In order to help you, I've detailed here a vertical line saying that we start the backtest at the same moment. It's around 2009, because I have additional data in my backtesting data for NQ that goes back to 2007. Let's start at 2009. We see that both curves are going up, okay? And that the target here is reached at 250R, and here nearly 220, I guess. When I see this and I want to make a choice on which underlying I'm going to trade, as I explained, I focus on the total profit. So here ES wins with 250 hours of profits. But I'm also watching specific times during this curve. Let's show, for example, those periods. We can see that here from 2014 to 16, we had a great run up and then a kind of decline in terms of R, in terms of global profits. During this same time, we see that ES just continue to go up. There is a little bump here, up and down, but the trend is going up. If I began to trade the strategy here in 2015, I would be like losing during 1 full year on the NASDAQ and not on ES. So this is an element I want to take into account when analyzing the output of TradeWin. Another example is here from 2018. You can see that we really do nothing during the 2018-2019 year, as we do here. So ES and NQ have similar behaviors around 2018, and during 1 full year, you won't be profitable trading this specific strategy. That's the kind of information I have access thanks to TradeWin, okay? So that was a quick example, but with such performance curves, I'm able to be really precise and to analyze also the big picture concerning the strategies. Let's take an example from your favorite content creators that never go below 2023. Okay, some of them go to 2022. Awesome. Oh my God, the strategy is working. Do you see that during 2 full years here, we are going up. Stocks only go up. The same for NASDAQ. Wow, that's impressive. Sorry guys, here TradeWin has come to change the way you see backtests. And here we go back to 2009 to have a more global view on what the strategy really does. I'm continuing. What if now I add the information that On the left, we have 57% chance to win a trade and 55 on the right. Okay, that's really similar. So from my side and from what TradeWin can tell, I would prefer trading during the London session the ES symbol. Okay, based on everything I just explained. That's the kind of thinking you could develop thanks to TradeWin. The top ranking for New York only variations. This time I won't share any curve. You will have the possibility to study all of this in the folder I'm giving access to you in the description of the video with all the data from all those backtests. Okay, you will find those tables, you will find every trade performed for each variation for the past 15 years. That's the data I'm sharing with you to give you a taste of what TradeWin really is. I'm not going into the details here for the New York only variations. I will let you study this if you want. And again, those are the results you could achieve with only 1 hour of screen time per day. Even if we say that backtested results have nothing to do with future results of the trading strategy, here TradeWin shows that the strategy is robust, is resistant during the past 15 years. So it might be interesting from my point of view, and this is not financial advice, to have a try on it. The key results from TradeWin, I will sum up them here, is that the London session is more profitable with less drawdown than the New York session. Okay? For the same strategy, the same underlyings. Yes, but ES and NQ are not very liquid during those sessions. There is no volume. How could you trade that? I'm not saying that it's not liquid. I'm not saying there is no volume here. I'm just sharing my objective results by TradeWin. And if TradeWin tells me that London session is more profitable than New York session and have the evidence that it's true, with all the details for each transaction completed, then I have an edge. And I'm ahead of thousands of traders around the world with this kind of data. You get that? Second, very important point is that TTrades, when explaining his cyber bullet strategy, always reaches and tries to reach the previous hourly level. Okay? It's important to recall that TTrades doesn't make his strategy mechanical. That's a fact. When seeing his video, you can see that he either enters during a breaker block, during a FVG, during a top that he feels good about. It is not a mechanical strategy. So with the translation I made from his strategy to the mechanical one presented at the beginning of the video, targeting the previous hourly level is not a profitable strategy applied to the TradeWin protocol. Okay? We saw in the previous tables that for London and New York session, if you want to trade this and be profitable over the long term, you might have better chances to do that if you target the 1 hour take profit level for each trade. Another key is that trading Forex with this strategy has not been, from my opinion, profitable enough for the past to try this today. Again, that's not financial advice. I'm continuing with the top ranking for both sessions. This means that you take 2 hours of screen time per day during London and during New York. So that's best if you live in, I would say, Western Europe, because you can trade on the morning the London session and then on the afternoon the New York AM session. Here are the results, and we see that the best strategy among all here corresponds to the symbol ES, S&P 500 futures, with a win rate around 56%, a gain-loss ratio of 130, and a total profit of 386 hours. Okay? Here is the corresponding performance curve. okay? And I can, again, have this curve for each simulation I performed. Data is power with TradeWin. I hope that at least you would get this message. So when I see this curve, I could think of many things. I already talked about those periods during which we don't have sharp moves up or sharp moves downs, but we remain like mainly stable. So again, what this means is that if you started trading this strategy during 2011, you would have made no profit until 2 years later. That doesn't mean that the strategy is not profitable. That doesn't mean the strategy is not worth it. It's just that instead of having periods during which the strategy doesn't perform well at all and is going into drawdown with negative performances, we just remain stable. Same thing happens in 2018, as explained, okay? Here you will need to wait for 2 years to break even, with here a 25R drop, okay? From my side, this is good news, because instead of having really sharp declines when the market conditions are not favorable for the strategy, we only have like a small decline at most, okay? If not, we remain stable. This proves that this strategy is like a tank. It always goes up in terms of profit, and when it does not, it remains quite stable. We don't have huge drawdowns. I'm sorry to tell this to you, okay? But this kind of performance curve is an hedge fund dream curve, okay? In terms of profits. There are plenty of hedge funds in the world dreaming about sharing this performance curve with their clients. This is a fact, okay? Again, that's an R multiple. If you transform your R into 1%, this means that you risk 1% per trade for a very long time. If you had done this since 2009 here, you would have made 400% over 15 years. This means you would have multiplied by 5 your total equity, by nearly 5 your total equity. You need to consider that really seriously. This is the kind of data TradeWin gives you. Let's compare now El Clásico, ES versus NQ. That's really important because traders have different beliefs here that are most of the time taken out of thin air. Again, the strategy is more profitable for ES if you trade both sessions than NQ. Even if NQ might give you better trading opportunities because there is more volatility or anything you could think about, I don't care. If we start both of the simulations at 2009 on the left and on the right, the same level here, 250R, is set up on the two graphs. And we can see that what we reach here by 2022 is reached like 5 years before, when only half of the backtested period is performed. Here ES already made all the profits that NQ would have done during the whole backtest. That's, from my side, a very important confirmation that ES is a better symbol for this strategy than NQ. El Clásico here is won by ES, and there is no doubt about that. Conclusion of this study is that London session is more profitable trading this strategy and with less drawdown than the New York AM session. Again, the core strategy here is the one presented at the beginning of the video. Don't go out and then tell, yes, TradeWin said that TTrades was right, it's profitable. No, I didn't say that, okay? TTrades has his strategy. I presented at the beginning of the video the strategy I backtested, which is, yes, inspired by TTrades, but which is not at all the strategy from TTrades. Okay? And the best variation from this strategy is the London only session with the 1 hour target profits on ES. With all that, we saw during this video that TradeWin can give you a mechanical strategy. TradeWin gives you the backtest complete results concerning those variations. What else do you need? That's a real question I'm asking you. And it's really important to get that even if TradeWin can give you all this, it's not enough. You will need to have discipline to build a psychology to follow the plan. It's really hard to stay in front of the screen and just waiting for the setup to be completed. Okay? And that's a part of your trading you need to work on as well or as the strategy part. Fine. So I said everything this again, you can have a look at this. But TradeWin here, as you understood, debunks strategy myths and gives objective data-oriented results. That's the main thing I want you to remember about TradeWin. There is no bullshit here. I'm going to attach the results to this video. You could verify them on your own. The trades taken correspond exactly to the strategy I presented. And TradeWin here, therefore, is unique. Only traders who measure the importance and the huge cost of backtesting manually know how this is a game changer. Do you want help TradeWin grow? Please share this content, talk about your trading friends and known people about that. It's truly a revolution in the backtesting world. Overall, I'm open to work with any group of traders willing to find the truth behind the strategies they are trading. Could be your Discord, could be your Telegram chat. The more you gather, the less expensive the service will be per person. Is this worth it? I personally think it is. Maybe you are tired of blowing your challenge account. Maybe you are tired of following and to trust blindly what everyone tells you on YouTube, and you want more objective results and data. So thank you again for watching this and let TradeWin come to life. And remember, this is time to backtest. Have a good night everyone and see you soon.